Hey, good morning, guys. Ken at Tortoise Capital, Creativity 202 check in for February 12th, 2023. Just watched Manchester United returning to form. They look pretty good against Leeds finally. I'm getting ready for the Chiefs to battle for the Super Bowl here, hometown team.
When is that tonight?
Yeah, I
When is
think
it?
it starts at it's at 5:30 Central, so in about 6 hours. That'll be madness. The pregame show is like 5 hours. Oh, good
It's
lord!
it's just I just can't understand
It's
that. I
too
guess
much.
it's
I mean, just
yeah,
lost our mind. It's everything except football.
yeah.
I like the championship game weekend. I mean, it's no BS. Four teams compete hard, and then the championship game just gets uh, so distorted.
Who are they playing?
I think they're in Phoenix, Arizona this year.
Okay,
I think
Super
that's
Bowl.
yeah.
So didn't the Chiefs win it? Won it 2 seasons ago, or 2 or 3 seasons
Yeah,
ago,
two or
wasn't
three seasons ago. I think 3 seasons ago. That was good times. That was great for the city of Kansas City. I'll tell you what.
it? Yeah.
And the kid, my kids have been pretty lucky in their lifetime. They've grown up. They were aware of hockey when the Red Wings were good and won the Stanley Cup the last time, and then they were here when the Kansas City Royals won a baseball
Wow.
championship. They were here when our soccer team, Sporting Kansas City, won our annual the Open Cup and the league. Open Cup for us is like FA Cup,
Right.
and and our women's team won two championships in a row. So they're they're familiar now with what that championship fever is like. And they've also learned to suffer when our teams aren't very good. So they get to see what it really means to be a fan, which is good. Ernie, how are you doing today, sir?
I'm doing very well, thanks. I watched that movie last night that you told us about the
Oh, Hana
Hanabi.
Hanabi, isn't that something?
That was really amazing movie. I really enjoyed it.
Yeah, it really it has its own certain pace to it. You know when you're watching a Takashi movie like that there's going to be some violence, and it punctuates. It's never elaborate. It's always just right to the point and just wow, and always unsettling. But the characterizations and the stoicism. He says more when he says nothing than anybody. I mean, he's just got an incredible presence, and I just thought it was a tender movie with him and his wife was really something else. How restrained they were with each other, but how natural, and then the ending of that thing is
Yes.
just excruciating. Oh, you know.
Well, where was it?
The movie is called Hana-bi, Hana-bi, and it's by kind of a legendary Japanese um, filmmaker named uh, Takashi, and sort of a new wave guy. And the thing that got me, the film critic comment about the movie, a guy from India said something like, when you watch this movie, it is um, mindfulness with watching or wakeful, or very much calm presence and mindfulness, and then swift action in the right moment. It's just a perfectly poised. He's mindful and calm and taking everything in, and then he acts when he's ready. which I thought was pretty a really good one sentence summary of this guy. So I was on a little quest to watch more of his movies. He's really something. Akira Kurosawa loves that movie Hanabi, and so if Kurosawa's watching it, then there's something in there too. Kyun, how are you doing?
Yeah, I'm all right. The kids have started the what we call half term, which is like a 1 week break in the middle of the term. Yeah, just spending time. Well, I like you just watched the the match before coming, so that was good. Yeah, that's it. I hope.
Chun Long, how are you, sir?
Yeah, really good. Actually, I have a Apple iWatch, and there's an app about the exercise. What I found out, Friday, Saturday, Sunday is the least exercise day for me. I was surprised, how come, it's a leisure day, it's a weekend. I should exercise more. Well, that's the opposite. So I decide to exercise more. So I go outside. I cannot stay indoor anymore. That's what I did last week.
That's good.
I hope.
And I don't know if Dan, I don't have your camera on, but we're just checking to see if you got your ears on. Oh, there's Dan.
Oh, sorry, I forgot to turn it on. I turned on my mic, but forgot to turn on my camera.
How are you doing there, sir?
I'm doing well, thanks. I had two grand dogs visiting with me last week, and my son and daughter-in-law came and went from Puerto Rico, and now they're all going back to Brooklyn. And the house feels a little emptier, but it's all good, and I'm really looking forward to seeing the Super Bowl with some neighbors tonight.
Yeah, I think we're gonna have a Zoom party here. My wife and daughters are out in California with her Chinese New Year and paying respects to her. Her father passed away last year, so all the siblings got together for that. And I'm at home with the dogs and my boy, so we're gonna watch the Zoom Super Bowl tonight.
Huh.
So I'm gonna go ahead and get us into the circle and get ready to get going. I just shared with you a set of like flashcards. The guy calls them PIP cards, PIP cards, and they are a little stimulus pack for storytelling. And what I'm going to do is that's a work in progress for me. I'm going through the flashcard approach. I'm a big fan of flashcards anyway, and I have accumulated decks of various kinds for critical thinking and creativity and team building and problem solving and stuff like that. So I'm investigating these to see how useful they are. I really like them so far, and I have some thoughts on storytelling in the commercial public space that that I'll probably talk about. But I wanted to share those with you. Just give you some food for thought, particularly as we've had a strong storytelling component in this course as we went. So keeping you up on my work in progress there. So aho, and here we go into the circle. And we're off. Work in progress. Shunlong.
Yeah, the word of last week is the edge. In the, we have treating edges. That's the words. There's two words for me. It's really difficult to understand when I first came to Canada. The first one is the edge. So when we have a cubic, there's an edges between the two faces. That's the usual way I understand their words. So when I try to find a job, I write resume, go to web search, how to write a resume. And then people talk about edge. It's really give me a hard time to understand what is the edge. I don't understand at all. So I'm not sure that's the reason I chose the word last week, but just interesting for me. I don't understand what is the edge. Now it's a hard time for me to understand what is my trading edge or even trading edges. Still need to find out what is my trading edge, or specifically, until I found out that, probably I won't be very successful in trading. So that's the meaning of edge. Another word for me is really difficult to understand is the credit, like a credit card. That's the word credit. When I came to Canada, the first thing I need to do is fill out the tax return form. Whenever you landed in Canada, had to, submit the form for income tax. So when I read that form, it's really difficult to understand what is a credit in the context of a income tax return. It took me a couple years to really understand that. For these two words, edge and credit, I still cannot find a exact word from Chinese language. What is the edge? What is the credit? There are no exact word to translate that. I can only translate that in a sentence. That's my word of last week. Work in progress. Still doing my kata challenge, the collapsing dragon, for last 2 weeks. Actually, I was doing that with the forex tester, so I can easily take many trades. For last week, I did some real progress on that. The pattern is a winning pattern, no doubt about that. I take that pattern only, collapse the dragon. I don't take any other pattern in my trade, the simulation trade. So what I found out is before I do the improvement, it's a winning trade. So I get average 1 hour per day. Imagine I take about 500 trades in a week practice. So what I found out, I cannot hold the trade for long, meaning I don't let the profit run. It's really difficult to overcome the fear of loss. It's a winning trade. I cannot hold it. I take a small profit, then the trade keep going to the downwards. I realize that. I try to conquer that. So I made some improvement, like a first 500 trades. I make 1 hour per day. Then when I try to hold the trade longer and get a clear understanding how to exit that, I improve that from 1 hour per day to 1.6 hour per day. in about 1,000 trees. So per day I take roughly 8 trees collapsing drag pattern. That's what I did last week. For next week, I will focus on reading the charts in the context of a longer time frame. I found that some days it's really difficult to treat the collapsed dragon. Some days really easy, take a trade, get a big R. So I think, the context of a longer time frame is really important for the winning reads. So next week, I will focus on that, reading the charts in a longer time frame, maybe daily, maybe a week. Or the next one I want to improve is reduce the number of trees. Now, I try to take everything, now I should, have a judgment, say this is a good quality of entry or bad quality of entry. So that's the thing I need to do. I think to do that, probably can develop an edge, treat one pattern only, try to understand that through and through, and develop an edge. Then I move to next kata like SSC or kata 2. But currently, that's my focus on to improve my reading of the charts or understanding of the pattern. That's my work in progress. Some understanding of my trading is, previously last half year or also like that time frame, what I'm trying to do is to build up a supporting system. What we call that? I'll forget the words. Now I need to lay the brick one by one to building a structure, a trading structure, not the supporting structure. Scaffolding, that's the word. So to brief, I think in past months, maybe half a year, try to build a scaffolding structure. Now I need to lay the brick for my structure, the building itself. That's my work in progress. So about the Creativity 202 lessons, like always, I check what's new I haven't done from what can post. Every lesson I did, I have a check mark, right? The website have that function. So I found out that there's a article, Wabi Sabi Kintsugi, that article, I haven't put a check mark yet. So I read that again and just reflect on that this morning, taking me maybe 1 hour. So my understanding is the beauty of healing. That's a kintsugi. That means I need to learn from my treating failure or treating mistakes. Just appreciate that. I did that. That's my failure or that's my mistakes. How to heal that, learn that from all those mistakes. How to appreciate that as the beauty of myself. So the next thought is the way of simple living, right? That's a wabi sabi, imperfection and simplicity of the living. What I found out over the years, I like to travel. I travel a lot to the western part of United States. Whenever I go to a big city or even small town, I found out that there's a park called Japanese Garden. In a big city, the Japanese garden maybe a little bit larger. In small town, there's still Japanese garden, a park called Japanese garden. I just like to go to there, take some photo, enjoy the small environment. I don't know why, I was attracted to that kind of environment. I just like to go to there. Every small town or small city have a Japanese garden. Really interesting for me. If you want to understand the Chinese culture, the impact of Chinese culture, you find a Chinese restaurant. You want to understand the Japanese culture impact on the United States, there's a Japanese garden. I just found that interesting. At least interesting for me. That's it for this week, I hope.
Ken.
Yes, hi everyone. I don't have a week word of the week because I wasn't here last week. So anyway, I'll start with what kind of my aha moment, or maybe even one of the highlights of the week. I think I posted one chart in 2 weeks, and there's a reason for that. But so I posted a chart this week, and Ken, you gave some feedback, and you said, which was quite unexpected. You said, "Oh, this is a professional approach or something to." Ernie's nodding, so he probably remembers it better than I do. To self-study and reflecting and offering it to the coach, which was, I just want to say thanks, because that was unexpected, but I think that was quite was enough fuel to keep me going for the rest of the week, and it's been quite tough going lately. And I'm just I'm wondering if I'm actually getting closer to the mountain but not yet seeing the mountain, or am I even heading off in a totally different wrong direction? So it's been that kind of few days, a few weeks really, because the trading results are not great. It's grinding out small losses, and I missed the big moves. I've missed the big moves, and then come back the next day, and there wasn't really a move, and so it was really hard going. So yeah, that was kind of the something that kept me going. I just wanted to say that. And then so now if I back up, so that was like you start the movie with a bang, and then now you go back to give you the context. And actually, Chan Long, what you said about just now, I think I picked up. You said judgment on good versus bad quality of entry is also something I'm looking at as well. So in my own way. So last 2 weeks, I said, I think last time I said was January, I had really bad month in trading. It was all kind of losses, and then missing the big moves. And February kind of, I haven't traded every day, but so some of the days, but it's not great improvement. So what I did was, I thought I'll become more focused and disciplined. So and by that I mean I've actually cut down on the number of symbols I'm trading. So I'll do up to 3 uncorrelated symbols, and usually I would just look at one, because I'm into, I think Chen Long said it, like reading charts, and I'm also in the same way, to just get a sense of the market. I mean, if it's a range bound day, you can take all the signals you like, but you're more likely to get scratches, or if you're lucky. And if not, I would end up with a minus 0.5, and pretty soon a few of those, and it pretty soon adds up to a bad day. So that's kind of what I'm working on. Let me just get into it. The problem, I was getting a lot of small losses from chop and range bound days, and I wasn't, because it's a choppy day, for example, and a day when the thing doesn't move very much. I think one of the trades of the day, for example, that Ken showed was like something like Devon, which ended up being a 2 or 3 hour day. I mean, if you're very good at trading, you can get 2 or 3 hour, but if you're not really, so sophisticated, you could end up with, losses. So that's what I was trying to work on, and then how to eliminate the small losses, so that just by eliminating them, I would gain, however many hours I lost there. I think the big thing for me is that I don't have the ability at the moment, or the process, to kind of find the movers on that day, or to even to identify them before. I mean, from the daily report and all that, I take down 1 or 2, but usually I just go to the old favorites, X, Cliff. I have, what else? I have Tesla on, but I've stopped trading Tesla because I looked at my results and they were so bad on Tesla that I said, if I stop this, I'll probably just improve by getting 0 R on Tesla, on the day. So I kind of stopped Tesla for a while, for now. And I can't remember the others. DVN is probably one. I seldom trade that though. So X, Cliff, AA. So, but they are correlated. X and Cliff are very, very correlated. So I've kind of decided I'll either be in one for a trade or the other, but not both, in case I mess up and you go in for the entry and both of them are losers for that trade, for those trades. The other thing I'm working on this, I noticed I'm working on the size of my risk box. I noticed on Cliff, I've used 15 cents. But then I realized that actually the range stat is like $1, so it's 10 cents. You can do a 1/10 range stat is a 10 cent. And I kind of I didn't real trade this, but I kind of just did some analysis. I thought, well, actually a 10 cent risk box, if I kept the position sizing the same, I actually can live with that loss better than a 15 cent where you give more room, but you get more nervous if when it gets, that's the thing. So I could even live with a -1 hour loss. It doesn't look good on a -1 hour, but I know in terms of the dollar, it's actually it's something I'm comfortable with. So I'm trying to look at that, because that has, I think, to work on that. What else? So I hope. Oh, I also am staying out of the lunchtime, US lunchtime now, just as my rule, because typically there's just, it's so range bound, and a lot of signals that don't really go anywhere or scratch at best, and just too much. So for now, and last week, I think one of the things I found out was, because I was really disciplined, I was really going for so I said I would only enter a trade if I feel it's a quality trade at the first PR flip, then that's where really the risk is the lowest. I used to, if the move starts going, I used to kind of say, oh, maybe I can go in later, but I decided I didn't want to do that. I think also, who was it? Woj, I think Woj, he said something about chasing, not chasing. He said, I told myself not to chase, but here I am chasing. It's that kind of thing. And so I've decided, for now, it's just, okay, let's stop that. If I don't get in the trade, I'm not gonna get in the trade later on. And I actually felt quite good about it. In the past, I would be saying, oh, if that move went, I would say, oh, why didn't I get in, and all that stuff. But I just felt quite good about it. So those helped me, I think, to kind of stabilize things. And there were days when I just had one trade, but I made like 1 hour, 1.5 hour, 1.8 hour. And that's better than -2 hour, right? So one trade, I said, it's true. Well, you can trade a lot and then get -2. And I said, well, and then when that happened, let's say I think I had one trade that was from the first trade, it was 1.8 R. And I said, okay, that's it. I'm done I'm not going to trade anymore today because I just need to get something positive out of this to say I can win on a daily basis, So that's why I haven't been posting. I've had a few times when I've just had one trade, and then there were many trades where I didn't take, and I thought, how am I going to post this? To say you can't post trades you didn't take. I suppose I could. I finally did it with that one chart because I had two trades in the day, and I marked it up and I said, this is where I didn't want to take, and this is where I avoided this, and so then I that was the one I posted. I think what else? Yeah, just so like things I'm working on is I need to find a process to find the movers of the day, so that I think I can trade those. And of course now I need to move the balance up to be for expectunity. So I need to take more trades, but good quality trades, so that I can increase the chances. Take more risk, but if it's expectunity, if you don't take it, then you won't get it. So also like feeling the market more or reading the charts, as Chan Long was saying. And I found that there were many times where I would be in a trade, it's not moving, and I get this strong feeling I need to get out. But I just say, no, there's nothing, and then your head goes, there's nothing in the signals, in the PSAR, nothing is telling you to get out. You just got to sit in there, and then boom, just one quick move away from you, and you're minus 0.5 hour down. And so I've decided I'll listen to my instinct more this time, whether that's right or wrong. And maybe I'm not in the zero state, but whatever it is, it's probably right not to be in the trade then. And also, I think it's important for me now to understand where the market is in terms of volatility. So I've added the Z3, the USZ3 on that, which kind of is helping me quite a lot. I think it does when it's narrow and range bound and small. Then most of the time I'm not taking that trade, and when it starts expanding, but sometimes it's slow because it's a lagging indicator. So that stuff I got to work on. Yeah, I think that's it. Thank you for your patience. Aho.
Ernie.
Well, I really wasn't going to talk very much today, but wanted to tell Kuhn I really liked I liked that chart that you put up. I saw that, and I was really impressed with it. And then I was curious what Ken was going to say. I thought, oh, is he going to rip this apart? And both Kuhn and I are both going to be wrong. But I was picking up a few of the things that you had done. I'm marking up my charts more. I used to kind of do things on the chart and then put it down on a separate piece of paper. And I was separating my notes from the chart itself. And you had put a lot of information on there. And I thought I need to do that. I need to get that information on the chart so that whenever I'm looking at it, I can pick up that information, 3 or 4 days later when I look at it, because then I'm going to forget, what my notes on that specific chart were. But I liked it a lot. I really thought you had done so well, and so I was so it was just interesting that you brought that up again, because I wanted to send you a note and said, good job. This was really good. So I'm really one of the things that I'm kind of working on is the I had a problem with TD Ameritrade and my Thinkorswim platform, and a young lady had called me and helped me get through that problem. And then just talking with her, she asked me if I was, certain things, if I was doing it, and I mentioned something about that I wanted to do a trailing stop, not on the price, but I wanted to get the RL10. When the RL10 hit my PSAR, that's when I wanted to trigger, and I didn't want to be triggering on the price because the price can go through the PSAR, but I really wanted to know when the RL10, I wanted to be able to trigger on that, and I wanted to be able to do swing trading, and I wanted to set a stop based on that. And then she said, "Well, that's no problem," and I go, "Well, I haven't figured it out," and so she just, as part I think that's what her job is having, help people with Thinkorswim platforms. So she had given me some pointers, and so I really was thinking about the Thinkorswim, that's what I'm going to use. And I think I was going to commit to it. And I had Phil Wu had, and he and Griff have been working so hard on what they're doing. And then, I watched Griff's video, and I think I had written to Phil about something, and I even, bought his books on Amazon and was going through that. I just thought he really did a good job on the Cornell notes, and I was really learned a lot from him. And so I'm doing my own version of the Cornell notes, and so it was just really great to be able to do that. And I wanted him to know about that I appreciated his work. And then he made me an offer on that, on how they work with the Thinkorswim platform. And it was too good to refuse, I guess. So that's my plan now, is to do that course that Phil has done, basically doing the because I think between him and what he's going to show me, and then what Maggie, my new friend at TD Ameritrade, I think that I'm going to be able to do some things that I haven't been able to do in the past. So I'm kind of looking forward to that, and I'm going to work on that a little bit. The other thing is, I've been really going through my, I can't remember which, there was something that Ken had prepared that basically just lists a lot of the, the collapsing dragon, all the different things that we go through, and the different patterns. And so I was just going through that and thinking, how much of this do I know and understand? And some things, the collapsing dragon, supported spring crossing, I feel very comfortable with that. And I've used those things with, I feel that I've been successful with it. I'm not going to be a millionaire in the next few days, but it's a slow and steady process, and I've always appreciated that, and that it's I'm enjoying the trip, I guess. But I've gone through those things, and I thought, here's what I know, and here are the things that I really don't know. And so I'm kind of taking inventory, and I'm trying to position it. I feel like it's a puzzle, but my puzzle is different than other people's puzzle. And so what pieces do I want to concentrate on, and putting them together? And so if I can get the corner of the puzzle, then you kind of go along the edges of the puzzle, and then work your way in. So I know my approach is going to be different than others, but the goal is to put the puzzle together. And so I think that I'm doing the right thing. I feel comfortable with what I'm doing. And I think that I'm kind of simplifying things. I'm trying, or at least in my mind, I'm trying to keep it simple, not overthink, but just worry about getting this one piece connected to another piece. And I'm trying to concentrate on that. And I feel comfortable about that. So I do feel that it's coming together a little bit. And the other thing is, it's a personal story that I don't know why I've been retired for a few years, but one of the things that I enjoyed about work, maybe it was watching the movie a little bit that made me think about it, but there was a tree outside my office, a magnolia tree. And I've been with the university for 30 years, and for some reason that tree and I were friends. I had a great deal of comfort that like in the spring those white flowers would bloom, and I always looked forward to that. And every year those flowers came out, and that tree was just, it was something solid in my work life, that whenever I go out, that tree would always be there. When I look out the window, I'd always see that tree, and every spring the flowers would bloom, and I just thought they were so beautiful, and then they get brown and then they die, but there was just a consistency and that you just knew that that tree was going to be there, and that those flowers were going to bloom, and over the years, I was just so used to that. And then when I left, I know it sounds silly, but I missed that tree. And when I left, I stood outside my window, and I moved to a different office, but I went back up to my old office. I could still see the tree, but I went there and just looked at the tree and said goodbye to my old friend. And I thought, how silly, that. And I don't tell people that, and they say, well, what do you miss about working? And I say, well, I miss the people, but I don't tell them that I miss that tree because to me, it was just something personal that was solid in my life. And so, and you guys have kind of been that, been thinking about that creativity is coming to an end. And it's like, well, I'm going to miss that. But I'm excited for the new people and what they're going to start, and what their experiences are going to be. So anyway, it's those are the things that have been going on for me in my week, and aho.
Dan.
So I have a couple things to share. First off, I did the exercise 30, or looked at it and thought about it anyway. And that one really interested me in terms of the rest of the Creativity 202 course and how it's going to go, for future groups, because the scale creativity was about how creativity explodes in groups, even of 2 or 3 or 4 or 5, and that's definitely been something I've experienced in my life. This last paragraph here, I'll read it. The bigger the group, the more creative potential it has, but the harder it is to achieve ignition. So for fastest results, start with a small team of 3 or 4 members, then feed in new creatives once the super engine is humming. And I really like that. It seems so true, as I think back on my work experience, I worked in IT research and advisory services for about more than 15 years. And even when I was a consultant, independent consultant, before that, I was with a small group, and definitely found that to be true, the power of small groups. I've rarely seen big groups be as productive. There have probably been cases, but there have been many more anti-cases. But I was very interested in how it could go for the creativity groups. And I'm interested in how we'll continue as Ken adds more people into it with the next cohorts, and how we can all help each other. Because I really see this as kind of my trading tribe. as we'll get into this, in the rest of my share today, or my story today, it's really valuable to me to be able to share my trading with this group, and really with anyone. I've talked to some of you one-on-one, from time to time, and I've had awesome coaching from Ken. So I definitely see it as my trading tribe, and anything I can do to be a better part of it is great. And as I see what's happening going forward, I guess those of us that have been in the 2 small groups of Creativity 202 will have the option of sort of seeding ourselves into the new groups, and even sometimes helping Ken coach and kind of continuing our journey, and maybe sharing our experience. And Ken kind of will bring everybody into the same culture of true storytelling and creativity, so that we all become part of this larger trading tribe, which is the bigger group and the bigger context into which the Creativity 2 groups fit. So I really liked thinking about that when I read about scale creativity, and that was kind of more of a go forward exercise than any exercise I could perform now. The other thing I want to do this morning is I want to share my screen, if that's okay, and give you a little presentation of my work in progress. And I hope that will be useful to you or to any that watch the recording. So let me, I guess I have to, is it going to be screen 1 or screen 2? Let's see, I think it's going to be screen 1. So I'll share screen 1. You'll see some things I was messing around with, but now you'll see my PowerPoint presentation in presentation mode. And I'm hoping that you see a full screen PowerPoint presentation at this point. Okay, very good. So this is my 30-minute swing trading challenge that I've been in the middle of. It was basically this last week. And what it is it's bi-directional swing trading of a limited set of symbols for now, using this 30-minute bar and the following patterns here. And it's a form of swing trading, really hybrid trading, because you're swing trading during the day, that may fit a number of things in my life. One is the bear and sideways market that I can't trade because buy and hold won't work, nor will most long-term core trades. It also may be a way of generating what Van called passive trading income that requires less than 2 hours a day on average. And it also may enable work-life flexibility, as long as I'm willing to be continuously plugged in and near a screen most of the time. And it could become profitable and enjoyable enough that even during a bull market, I'd continue doing it. That would be awesome. So here's the plan. The plan for it is to review Ken's swing trading portfolio daily. So that means, going to the nightly podcasts or listening to the recordings thereof, because sometimes I don't like to stay up that late, or I'm doing something. So anyway, that's what I'll do. That's what I've been doing. And then post-market, frame all the stocks for myself, so over the weekend, draw my support and resistance lines on those stocks on the daily and weekly time frames, so I know, where the train stations are. Prior to trading, select up to 7 for my active watch list. So in other words, based on what Ken said in the nightly podcasts, I'm really looking at X tomorrow, or I'm really looking at EEM or whatever, or based on my own analysis, I see here's one that looks like it's right up at the daily support or resistance. I might get a breakout. I might get a breakdown. and those are my favorites. So those are the ones I put on my active watch list. And then before I trade, I'd set the clock alerts for every 30 minutes during the trading period. So mostly that would be all day, unless I had to go somewhere. Set the clock alerts every 30 minutes. I come in and look at the charts. Now, when I see a chart that's got a likely setup, I see it's looking like it's, maybe it's set up already, in which case I go right to execute. But even if it's not ready yet, but I think, within another bar or two, it could be ready, then I'll put alerts there so that, because a lot can happen during a 30-minute bar. And there may be times when I can get to the screen right away if I get an alert, and I can put in that order. So that's taking us to execution, step 6. And so that, only when I get a clock alert or only when I get a chart alert will I be active. The rest of the time, I should not be looking at this stuff. That's the key to this swing trading challenge. More on that later. Now, before the close, I may have some end of day exits that I do for money management or market context concerns. And then at the end of the day, after the market, also, I'm going to journal my trades post-market, and then on the weekend, prepare a full report for the team. Now, drilling down into execute. This is when I go active, when I got my alert. I'm going to place orders on any symbol with a setup. They could be a stop limit order if it breaks out. It could be a limit order if it already broke out but didn't go that far yet. Like Kyung was talking about taking that first dot on the PSAR. Mine might not be the first dot, but it's kind of that same idea. I don't want to chase it if it's gone too far. So I may put a limit order to let it come back a bit, or I don't usually like to use market orders, but I could use them potentially. So I've done that. I put in my orders. I'm still there. Now I'll look at my active watch list, and I'll look at my open trades, and how I decide if something's moving is I just have the watch list sorted by the percentage move for the day, and the bigger or smaller ones are the most interesting ones. And I also can periodically leave the active watch list and go to the whole watch list, which is all of Ken's swing portfolio, plus any, usually there's 1 or 2 I'm interested in from my long-term trading. May have them on too, in case I want to turbo them somehow with a swing trade. I'll look to see how they're moving. I'll look to see how the market's moving. But then I'm done. I need to, though, I need to check. I may have had an order fill. I'm not quite done. I need to see if the order filled. And if an order filled, I want to update my dashboard, because I always want to be aware, of how many I have open, how many long, how many short, how many I absolutely have to look at on my next alert. Because, if I'm really in a hurry, if I really don't want to take more than a minute or two, the least I need to do is look at my open trades and just make sure, that nothing, too crazy is going on. Oh, and I need to check for PSAR flip exits. Now, those are more complicated than you think, because as I mentioned, a lot can happen in a 30-minute bar. How far do I want to let it go across the PSAR? Maybe all the way. I don't care. Because until that PSAR flips, I'm not going to exit. Okay, the PSAR flip takes 2 bars, because there's a after the, let's say it's going down and it flips up, there's going to be that last down dot, and then there's going to be an empty bar while it's deciding to flip as the RL10 comes. And then finally, there's going to be a bar going up. I mean, a dot going up. And I like to wait until the new dot going up in the other direction has printed and the bar is closed. because that is something you can back test. You can just look at the chart, and say, well, if I'd waited for that, it would be the same thing every time. It would be the close of that bar. But, how much am I willing to give up to align with the back test? How much do I trust my discretionary judgment on what that bar is going to do? So what I've been doing so far, when I see a flip in progress, is I'll put an alert, about where that bar could go during the flip, and say, if it went, and it's time and money. If you're in the last 5 minutes of the bar, it's unlikely that the flip is going to get canceled, because it's going to come back in the other direction, and oops, the RL10's not going to go over, and the dot that started to print is going to disappear, and now you're going down again or back in the same direction. I've seen that happen. But, as you get toward the end of the bar, that becomes increasingly unlikely. But the other factor is I really don't want it to go too far against me when I'm going to close during this bar anyway at the end. Why not close now before I lose more money or lose more of my profits? So that's discretionary still, how to do that PSAR flip, and it's more complicated than you think. So back to the execute process. Let's say we're not in a PSAR flip, but now I'm just checking to see, do I have any other predefined exit? Do I have a 2R battle drill going on? And check for any new setups that may be forming, and repeat the process. And then go back to having fun with the dog, the wife, or my life. And I found, well, I'll get into what I found. So let's talk about my results during last week as a first timer in this process. So here's what I did. I was thinking about it and planning it during Monday and Tuesday, and then I started on Wednesday. So you see the green shading for Wednesday, Thursday, and Friday when I did it. Now, one of my goals was to fit this in with my life. So on the Thursday, we took 5 dogs to an off-leash walk and had a great time. And I didn't check the charts. I didn't check the phone. One time on a previous off-leash walk in that same place, I was trying to look at the trade station app on my phone, and I tripped and fell and almost hurt myself. I did hurt myself on a rock. So it's not good to trade while you're doing an off-leash walk with your dogs on a rocky path. That's my wisdom for the day. Anyways, that's why that morning of Thursday is shaded. The only thing I had was a 1% profit trail stop on Tesla, because I noticed before I went on the walk that Tesla had gapped up pre-market and was almost up to 2R gain already. Do I want to give that up? No, sirree. So I put the 1% profit trail stop in it. And you can see on SPY what happened. On SPY, it opened higher, gapped up, and then it went down. Tesla did the same thing and stopped me out while I was on my walk. But unlike the SPI, Tesla kept going up like this. So what I did was I track on all of them. I track both the PSAR flipping exit and the discretionary exit if I took one. And if you go back to last night's posts on the campfire, you'll see I posted all 10 of my trades. Although the Tesla one I just talked about didn't come out right. What else happened? Thoughts and feelings. I really enjoyed Wednesday. Wednesday, I felt like I was totally in the spirit of the thing. I did it all day, and I was not glued to the screen. There were a lot of 30-minute segments where I only spent a couple minutes, but I still got 4 trades. Thursday and Friday seemed more challenging. I seemed to be thinking about it a lot more, looking at the screen a lot more. And until all the trades close, because I'm still tracking the PSAR flipping, I still won't know, whether Wednesday was less profitable than Thursday or Friday. However, I think Thursday and Friday will probably be more profitable than Wednesday. But I felt like I looked too much on Thursday and Friday. I spent more time than I wanted. But the bottom line, this was my best hybrid swing trading week ever. It was just awesome. And you'll see the results. I mean, for me, I felt like they were awesome. So these are my aha moments. On Wednesday, I felt like my 4 longs, I had 1 short and 4 longs. I felt like they were fighting the market trend, because the market, you saw, I think, go back to Wednesday. Yeah, you see it was down on Wednesday and then sideways. So I felt like my longs were fighting the market trend. And then on the 9th and 10th, most of them were short. I was following the market context. I was looking for longs. I wanted longs because my money management rule, I should have put this in here. One of my money management rules is I don't like to close the day with more than 2 open in the same direction unless they're already profitable enough not to gap away from me too bad. So, if I can get 2 longs and 2 shorts, that's out to 0, and I can keep all 4 of them, by my money management rule. I was also surprised by how much my discretionary exits underperformed the PSAR exits, but also how hard the mechanical PSAR exit was actually hard to do, as I described. I also had a big aha moment. I realized, on Wednesday, I closed like 2 or 3 good trades because of my money management rule. However, the PSAR flipping exit is still on, because the PSAR flipping exit for those trades I closed, the PSAR flipping exit doesn't close for anything. It just waits for the PSAR. So those are still, and so with my discretionary exit on Wednesday, I closed like, I think 2 or 3 of them at the end of the day, and they lost money. Most of them are scratched. But if I waited for the PSAR to flip, even though they were not really with the market, because the market was kind of short and these trades were mostly long, they did better. Well, I had 1 short, which was the marijuana ETF, and it was good I stayed in that for the PSAR flip. Yeah, so I was just, that end of day close, that money management rule is kind of a challenge. And I was thinking, what if during the afternoon, if I already am pushing the limits or over the limits of my money management rule, what if from there I switch down to the 10, 5, or 3-minute bar and just take some day trades in the same symbols? If I see them setting up for what would be a good swing, like a breakout or a breakdown or a channel regression, mean regression, I could take the first couple hours of it on a lower time frame and then just close it end of day anyway. And that way I comply with my money management rule, but I don't waste the trade. Another aha was how much I learned from Ken's coaching last night. Thank you, Ken. One of the big ahas coming out of that for me was how important those daily and weekly support resistance lines that I draw are. They're the stations, where the train comes and goes, and I'm watching them very closely. And how much I learned from putting together this presentation for you guys, and I hope it's useful. In terms of results, here you see I had 10 trades. 9 of them were real, but they were simulated on TradeStation. But they were still real. I've noticed the TradeStation simulator seems pretty true to life compared to at least small money real trades. I had 1 paper trade, and I have 1 that's still open. Has not taken a discretionary exit yet, has not flipped its PSAR. And I tracked I talked about what I tracked. So I had 3 losing trades. none of them more than 1R. They were all fairly small losing trades. I have one still open. I have 3 winners, but they scratched, and I had 3 more winners, and one was a big winner. About 2.7R, I think. I had 6 long, 6 short, and 4 long. Now here's the money slide here. The real trades, well, all of them, because I consider them all real trades, because even the paper trade, I kind of, I picked it looking forward. I didn't know where it was going to go. I just said, what if I took this, and I put it in the tracking all the same as a real trade. This is my campaign totals for February 8th through 10. Now, I will say my discretionary exits, which generated 2.77R so far, because I have one still open, that's a good week for me. I've struggled to. Gabriel said when I was doing the futures trading with Gabriel early last year, that was the gating criteria. If you could average 2-hour a week for a period of weeks, you're ready to kind of go into production. So that was a good week. Even the discretionary exits, which I felt like they stink compared to the PSAR flipping exits. But as Ken said last night, we don't have enough with 10 to know, whether for me that's conclusive. But to get 9R with those PSAR flipping exits was incredible. What's missing? I still don't have a fully baked exit strategy. My discretionary exits are all over the place. So other than waiting for the PSAR to flip, it's not fully baked. And even for the PSAR flip, I need to write down those rules of thumb that I kind of talked you through earlier about the PSAR flip. I need clarity about whether I should try to take all the valid setups for my 1 or 2 most active names, maybe the movers for the day, or should I just cherry pick setups from all the 7 stocks on my active watch list? I need clarity on that. I kind of did a bit of both. And what's next? Well, I'm going to trade using real money next week, small amount, maybe. I don't know. I haven't decided whether to do 2 shares or $10 R or $20 R, but something like that. And then I'm also going to plan 2 predefined exit patterns. One of those will be like the 2R battle drill, and the other one will be something about the end of day. Otherwise, just use the PSAR flip for everything and stop looking at the screen, after I've done the mandatory things I was supposed to do. So with that, I am complete. Thank you. And aho.
Let's see. Yeah, let me know when you can see that.
See a blank screen.
It should be loading. It'll take a second here. Slow. Every time I screen share, when it's recording. If we've been in longer than 5 minutes, it'll crash once. Let's see, screen share. Let's try it again.
Yeah, it's come up now. Okay.
Okay. All right. Yeah. So for Chinlong, what I might say on the challenge of holding the winning trades longer, recognize first of all, give some gratitude for the fact that you have some winning trades that give you the time and space to study alternate forms. So you've got a ratchet that has, hey, I've got some winning trades, now I can think about it. The idea behind the Wu-Wei exit
That's for
was
me
to
or for Chenlong.
Chinlong.
Sorry, it says KL here. Oh,
Yeah. It was also.
oh, sorry,
It also
KL
worked
is
for
sorry,
you as
sorry,
well.
KN. Oh yeah, sorry, I forgot.
So this is actually for both of you. Yeah. Uh, you know, the tension on exits, and Dan talked about it too. That's just always a recurring theme, and that is, oh man, I got a winning trade. Now what am I going to do? And that's why that's harder than the entries ever. So the idea of the Wu-Wei exit was to eliminate all that angst by simply describing the aggressive exit, which says, I'm going to take the profit with the minimum amount of information that tells me the move might be over, and I'll take half the position. And then the conservative exit strategy simply says, I'm going to wait for the deliberate rules-based exit that I know through backtesting over large cases is advantageous. Well, why wouldn't we always just do that? Well, because this case is its own unique trade, and this is the one that'll hurt the most if I let it get away. So what you end up by just committing half the position to each one is completely eliminate the psychological tension of deciding definitively what to do with that exit, because you don't have to. You simply treat it as an ongoing experiment, and there's going to be there's an outcome that says, and maybe it's half the time. Half the time, I should have gotten all out on the first the first impulse, and then half the time I should not have. So the thing that resolves that tension is your reentry criteria. If you get out with the aggressive exit and then it doesn't come down and hit your conservative exit, but then starts to resume, all you need is the reentry criteria to put that half a position back on, and boom, you're back in the trade, and there you go. In fact, if it successfully survives your decision to get out with half, that's actually a vote of confidence that the next leg, when you thought the people were no longer going to buy it, they actually came in and started buying it. So you actually have evidence that this trade is getting stronger. So the idea of the Wu-Wei exit for all of you is this idea of how to resolve the cognitive load and eliminate the tension and the emotion of the decision. Just commit. Now that means you got to have two rules: one for aggressive exiting using trader discretion, which is your risk management, and then one that respects the mechanically tested rules of the, maybe it's the PSAR itself or something like PSAR flip. And some people will just say, well, that's just kind of a silly party trick, psychological games. You should just trust the numbers. And I would say that's someone who is not a trader says that. That's someone who doesn't struggle with the decision on how much insurance to buy. How much insurance do I want? Just enough. Okay, which way are you going to err on that one? When's the first day you start buying insurance? Because that's every day that you delay, you have more capital to put in some kind of growth account, and you can grow it faster than the insurance payout. So why would you suffer over if you tried to approach life and buy an insurance that way, you would drive yourself to an early grave, and then you'd end up needing it sooner rather than later. So, to me, the idea of the Uwe exit, where you just simply eliminate the cognitive load and eliminate the anxiety, is amazing. And the reentry is the key to sanity. I was saying reentry is the key to sanity before he can even able to articulate why, or to come up with the Uwe exit. So that's the way I would look at it. Now, a couple specifics on that one, and one for Dan, is to take a look. You talked about the challenge of the PSAR flip is that price at the turning point, price will pull away from the RL10 a little bit, and then the RL10 will catch up. But in that interval, you will have the experience all the time. You saw me working through that this week, when price will trigger the PSAR, but then the RL10, but then it'll reverse back to the original trend, and the RL10 never even gets through the dragon. So over large numbers, the RL10 triggering the P that's the reason that works, is because it doesn't respond to those momentary blips of surprise. And I'm going to say more about that now. So a way to get around that, if you wanted to, is to use like a PSAR -1 exit. And so the difference between each PSAR dot is not all that much. And if you just go to the last PSAR dot that was printed, and when the RL10 hits that or something like that, you can actually project that a little bit more. Because that's what I use on the entry. The entry, waiting for the PSAR flip and then entering. I often miss that early burst at the turning point. So I just go back 1 or 2 dots, and then if price goes through that, I just take it, because that would have been significant enough. And then eventually the RL10 will flip, and then I'm in the trade with a better entry. So looking back at the previous established price levels in the PSAR can help you with that. On the finding the movers, I'm gonna just advise there with Kyun. When the symbols are in swing trade critical states, which to me is like the sniper setups and the mechanical entries and all that, the daily mechanical frame, breaks out of yesterday's high or low, that should be connected to an alert that tells you, by definition, it's moving, and it passed a significant checkpoint at the place where it could not exceed yesterday, where it reversed yesterday. It went through that. That's an alert of a mover. There's new energy in there. So I would, and then Dan shows in his charts from last night, the power of those daily and weekly channels, and that's also demonstrated in Constantine's. He's the prop trader with his USD gold pairs. Those daily and weekly support and resistance levels are huge in his trading. We had a good discussion Saturday morning about nature's rules, and you can't, and what happens when you break the rules. And the observation was, since we were talking about rules today, is that you can't even break nature's rules. But because you don't know exactly what they are, we approximate them with what we think they are, and then we go right to the edge and we find little test cases, and then we learn that what nature does with biology, the way biology respects physics, is that the biology builds in strength with flexibility and adaptability, like in our ligaments in our joints. and that as you get closer to a certain edge where the rule is tough, and you overload, the system adapts by getting stronger in the areas where it needs it. So you get, tendons and all that are stronger than steel, but they're flexible and adaptable. I would also just remind us, 2 out of the 5 days in a week are going to feature strong directional moves right from the opening. So we studied that by doing a daily NDX. We simply set the low of the day to 0 and the high of the day to 100, and then we broke it into 100 equal segments, and then we plotted where the entry and the exit, or I'm sorry, where the opening and the close of the day were, and then you could find where on that daily 100-point scale it opened, and then where it closed, and then the difference between them was the signal. So like if it opened at 10, that means that it sold off a little bit more, and then it went to the high of the day and then closed where it closed. So we use that calculation in the signal to noise ratio. You see that for my usual suspects on the daily report all the time. But the other thing that it let us do was simply to say, what does the map of all the openings look like? And it turned out that 40% of them had an opening equal to 10 or less. Direction irrelevant. It was, no, I'm sorry. It was it was between 0 and 10 or 91 to 100, meaning that it opened in the extreme of the day, either at the top and then sold off harshly, or opened low and then just took off directionally. And that insight is kind of crucial because it explains why it's so darn hard to train the opening. That if you got a 40% chance on a given day that the opening was going to be significant, and if you put a frog box around that and then just played whatever the direction was, 2 days out of 5 you're going to really be happy. Well, that's frequent enough that if you don't do that, you're constantly beating yourself up. So why don't I get that move? But it's also infrequent enough that if it didn't happen today that way, you're not allowed to be surprised, because more often than not, it doesn't do that. Meaning that there was a significant move on either side of the open, which tells you why that. So the way to play that, by the way, is to start with the assumption it's going to be one of those two until it doesn't. And so you put that hybrid frog, their MMRB bracket, right on the open, and you just take it. Whatever direction it goes, you go, and your only job is to get to no lose plus dinner for 2. That's the idea behind the OR3, by the way. I just hold my nose and go. And if it doesn't work, it doesn't work. And so maybe this is going to be one of those 3 out of 5 days that it's going to monkey around. If it's one of those days where it just keeps going, then you made your whole day. And it might make your whole week, because your MMRB is small, so your R capture is large, and you're not even thinking about it. You're just playing the law of large numbers. You have already, it's like we talked about with Dan last week. I'm not considering whether or not to get in. I'm just in. The other point is you then have to watch the turning points of the RL10 quickly, which is why that RL10 reverse and crosses the baby dragon and just get out is crucial. As long as you've got re-entry criteria, you don't care. In one way, Dan showed that he's got one really strong trade out of 10, and absolutely tickled pink with his performance this week, if I'm rephrasing that correctly. If you looked at your winning percentages and the average, all that stuff, you don't get. No, you were taking earlier exits, locking in some gains, and weren't experiencing losses or regret, and then one of them worked, and bang, there you are. That, in a nutshell, was like the insights from trend following, but applied on an intraday or a shorter term basis. So that stuff. I would reinforce to Ernie. I've got little little blue story. So when we first moved into here, I spent $4 on a little mangled Charlie Brown Christmas tree looking scruffy blue spruce that was in a bucket down at Home Depot, and nobody wanted it. And I said, I'll buy it. We put it in, and it was in a crooked trunk, and it was all scruffy. And that little sucker has straightened up and flied right, and he's now about 10 feet tall. And I planted him the first week we got here, and I see that little guy every day when I leave, and every day when I come in. It's the first thing that I look for. So if that's crazy, then I'm crazy. I would take a look at the 70-point skill check thing that Tom reminded us of that we had done, and consider that to be a master class on demand. And you guys in this group have the authority to just say, hey, I want a class on one of those. When you do your self-assessment, I would need to hear, and I'll record it, and then that'll be the way that I build out the master class on demand. I want to share another screen with you here, if I can. So, and this gets to Dan's comment about setting the alert, walking away. First of all, that's a healthy thing to do, is to get up and walk every half an hour, get some steps in, stretch your legs, and get with a little bungee cords, a little stretchy bit, do whatever, get some reps. So across the top, what I want to, and I think I may have showed you guys this, but I thought I may have been talking with Jeff on this one. So here's the idea. So imagine you had all of these different time windows. There's guys trading on 1 minute, 3 minute, 5 minute, 10 minute, 15, and 30 minute. Stop me if you've heard this before. And then this is time across the top. So that means the 1 minute monkey is making a decision every minute. The 3 minute monkey makes a decision every 3 minutes, and so on. So on the sum, you're seeing how many monkeys are making a decision at the close of the bar. Now I know everybody's clock is not precisely timed, but it's pretty close anymore. Now I want you to realize, so you wonder how many monkeys are in each one, and how much money do they have, and if you took how many times how much money they had, you'd get something like how much potential energy, how much power is in there as soon as that bar closes and all of their trading rules fire, and then they take action. You get a burst of activity right after the close of every bar intraday. But some of them have a lot more people engaged. Like on the 15 minute, you've got the 1 minute, 3 minute, 5 minute, and 15 minute guy. 4 monkeys all firing. Well, if you're the 1 minute monkey, you go through long periods of time where you're the only thing that's happening, and then suddenly, every so often, you're not even aware of it, you get this burst, a much bigger burst of activity. Well, what if you actually could know how much money they had? And let's just say that you were able to put some numbers together, just using your own sense. How many out of 100 traders, 100 day traders, how many of them are trading on 1 minute? Let's pretend it was 1, and 2 are using 3 minutes, and 6 are using 5 minutes, and 10 are using 10 minutes, and 20 and 50 and so on. Can you guys see this spreadsheet? It says my screen sharing is paused. Wonder why that's the case. Oh, I'm sorry. Can you see that spreadsheet now?
Yeah, we can see it fine. Yeah,
Okay.
Yes,
or at least I can.
the writing just appeared on it.
Yeah, I'm sorry. Yeah. Oh, okay. Yeah, I just noticed it was paused. Now I feel stupid. Yeah. So the idea was that this gave you the frequency with which how often each of those little guys is acting on the minute or the 10 minute or the 15. So there's these moments when you get sudden bursts of how many guys, a lot of more people are acting here, and so you get a surprise move, aha, and I wonder why that's the case. And if you're the 1 minute monkey, you think everybody's looking at 1 minute charts, and they're not. So now if I go down to this one, and I say, let's put how much money are they slinging around? So that's not equal. I mean, my view is that probably, the longer the time frame that you go, the more money is being slung on that. Like the long-term buy and holders, they're making big moves, but not every minute. So if it was something like, if this is how much power was in there just notionally, this really now starts exaggerating how much money is being slung around at some of these critical checkpoints. And you could just imagine what this looks like if you took it out to 60-minute and 2-hour and daily and whatever. Well, that's why you get that mad rush of volume at the open and at the close, is because you got all those orders from the longer term guys all stacked up ready to act. And that's so much money. It's just, you get this overreaction and craziness, but it's the space between the open and the close after those first and last 30 minutes where you get something like just the committed day traders and maybe some hybrid swing traders are acting. So my point of all this is to Dan, you are, and all of you, you're developing the skill to be able to look at any chart with your indicator set and instantly make sense of it for actionability or not. You got to be able to do that in 5 seconds. And then you got to have some amount of impulse for action to put it in play. And then if you had 1, 2, 3, 4, or 5 charts to evaluate, 5 seconds per, X seconds to put it into place, when you set your half an hour alert, don't put it on the 30-minute. Put it on the 20-minute, so that you have 10 minutes to go through your rapid scan, rapid decision making, implement for action, and then the bar closes and you're executing instead of reacting. So there's a little tweak inside that. What that will do is, I don't know if that's exactly the right way to do it for you, but that line of reasoning will get you into process analysis, that human machine interface, and get you thinking in the right direction. All right. So if you look at this part of the chart, this is why we get surprised at certain moments. And oh, by the way, this is independent of trade location. Imagine how much money gets triggered. This is where if you take the number of guys times the amount of money that they had, now suddenly you get these moments in that half hour. Hey, this one on the half hour in this notional array, you're getting the most amount of surprise. That's why I want to start evaluating it here, so that I have 5 minutes to put my plan together, so that when the explosion occurs, I'm ready to go. Let's say right in here, I'm able to see this thing is Z3P and is coming into a little breakout box, and in about 5 minutes, I want to already have decided to be in the position that says, if it breaks out from here or from there, I'm in and I'm going. I'm not considering, I'm already in. So where you set those time, that, by the way, leads me to this next idea that I was helping Phil Wu and Chris White of EdgeRaider understand the power and the beauty of the the sniper setup. So I sent him this little idea. And just if, you know, I know we still got a little bit of time yet. Appreciate your patience. So in the sniper setup, I'm looking at 3 locations, 30 weeks, 30 days, and 10 days. And those are all on a score of 0 to 1. So if you want to be in the Godzilla, you've got to be, I look at those first 2 columns, you got to be less than 0.1 on both of those, because then in the 150-day look back, you're in the bottom 10%. And that thing is either going, and so it looks something like this, and it's either going to retrace or it's going to collapse like a collapsing dragon. Check or hold. And then you also have to be in the bottom 10% on the 30 days. So if price was down in here. So on the short term, the 30-day look back, it's horrible. And on the 150-day look back, it's horrible. The 1 day is really just or the 10-day is just an extra bonus, because there's other patterns that I use that only require 10-day oversold, like the channeling system. But if location is good, then volatility becomes the next criteria. And I look at 5-day volatility and 1 day. The 5-day is what it requires to get on the Godzilla report. Okay. So it either has to be abnormally volatile, meaning it gets shaded green, meaning that it was greater than 1.0 standard deviation of the 5-day volatility, or it had to be less than 0. Now, most of the time you've seen me say that normal is between +1 and -1. But it turns out that because volatility looks like this, that you have fat right tails but very constrained left tails, it turns out to get enough categories of abnormal quiet, you actually have to set that threshold to 0 rather than less than -1 in order to have any meaningful ones. Because, again, volatility can only go to 0, but the upside can be amazing. So those are the 3 criteria that you get to be a Godzilla. I include the 1 day because there's some extra insights into here. And this is the idea. How do you trim down your list if you have a lot of things on the list? So if the location is abnormal, meaning that the 30-week and 30-day price is at an extreme, then I look at Z5 volatility. So here's how the Z5 volatility is considered. I take the last 150 days of look back, and I just construct 30 5-day bins. And each one we find the high and we find the low and divide it by the closing price of the last day of the bin. And that is going to equal a volatility percentage. What percentage of its range did it travel in those 5 days? Check or hold? Okay. So then we take those 30 data points, and then we find the maximum, the minimum, the average, and then the standard deviation, and we set the boundaries of plus or minus 1. And then that gives you these shaded, these z-scores in here. And then I have it flagged, so anything greater than 1 it triggers, and anything less than 0 it triggers. Now, Electronic Arts is amazing because it's also less than -1 on both and then the 1 day, the Z1 is simply taking the last 30 days the same way and finding the range percentage, which is the range divided by price equals a percentage, and then also arraying it by max, min, average, and finding the z-score. So you could have, so when I look at these little Godzillas, everything on this list has met that criteria. But then when I look at the 1 day price action, I get this extra breakout. And this is, so I would love to see the Z1 also abnormal. Because if I have 5 day volatile and 1 day volatile, that thing has had 5 days in a row and the 5th day was large. That thing is by definition in play. I just found a mover. And now if I just take, I could actually zoom into that, put a small MMRB risk box on it the next day and play the breakout, because it's already clearly in play just from volatility, and it's at an extreme location by the Godzilla. Holy smokes. That thing is, you don't even have to wait for it to explode. It is running. Now the only question is there one more day of juice left in it? Well, the last day was volatile, if it was volatile. If the last day was volatile, love it. If you like that idea, you don't even have to filter for the Godzilla patterns. You can just go to the S&P 500 most volatiles, and these are the ones that I sort by the Z5 maximum score, and then just report the 1 day, like BAX. I don't even care where it is in location. The fact that the 5 day is a 3.26 5-day range and the 1 day is 1.2, I'm automatically interested in it just because it is in play. So now I can find with it's got a $2 range stat and a 20-cent MMRB. On that basis alone, I can trade that. I guarantee you. Why? It's liquid. It's in the S&P 500. So the S&P most volatile is an interesting one. Check or hold. So that's a way to find the movers. Here's another one. Same report. The 1 day movers. All I do on that one is I take the Z1 volatility and sort it by from highest to lowest based on the size of the Z-score. All other things being equal, NWL, VeriSign, and whatever NWS is, those things made a 3.5 to a 5 sigma 1 day move, and the 5 day move was large. I don't even care what the location is. If it's extreme, that's just gravy. But I could go to there and just specialize in that setup. And I'll tell you the one I love, NWS. Its 10-day score is in the bottom 2%. And it's got an extreme volatility. Whereas NWL is kind of in the mid-zone. That's like a fence sitter. So I can tell you right now that NWL is at the 30-yard line on the long period, and it's like this, but it had one large day of moves, a 5 sigma move. That thing is in play. And if you like that idea, how about finding the movers the day before they become a mover? Oh, I would just come down to the S&P most quiet. These four have, they're sorted by the smallest Z-score on the Z5, but it also shows, the ones that are double red, that thing is like a 5-day range that is so small and the 5th day is tiny. What's that look like? That looks like the day before somebody threw a big stone in a quiet pond late at night. Bracket trading options. I don't care. So finding the movers, well, you can reduce that list to the ones that are just getting ready. What I want you to think about is it's a bag of popcorn and it's in the microwave, and this bag has been in there for 40 seconds and this one's been in there for 1 second. I want this one all day, because on average, within 5 seconds, it's going to start popping, and the popcorn is just going to go everywhere, I don't care which direction it goes. Popcorn can go anywhere. Price, when it pops, goes here or there. So if it's in a super quiet zero state, I'm not surprised one of those becomes next day's 1 day mover. And then if that 1 day mover gets really big enough, it could drag the 5 day, and then that thing is really in play. Most quiets, most volatiles, 1 day movers, specialized form of the Godzilla that also includes key price locations. I don't know if you need anything else other than that for the rest of your life, based purely on price, condition, and 1 day anticipation. Just from the most quiet one, you can never be surprised if something on that list exploded the next day. That's just a fact. Let's see, clear drawing. So that was what I wanted to say about, find the movers and subtle interpretations. That is a unique lens looking at the world. It doesn't care about market. Now, oh, by the way, if you added market condition, if the S&P is ever on that list, then the whole world is about ready to explode. So this is now that relationship between market, sector, and target.
Hey, Ken, I got
Yeah.
a question. 2 questions actually, back on the previous thing.
Yeah.
So the what was W and D? What is the range for that
Just
that
a minute.
number?
Let me go back. Say it again now.
So the W and the D, which is
Oh,
the
yeah.
30,
Yeah,
what
it
is
just
the
says,
range for that? I mean, it's low, like 0.02, but does
yeah,
it go from
the
0 to
scale is
1
from
or
point is from 0 to 1. So
0
it's
to
a,
1? Okay.
it's a pure index.
Okay, cool. So, and
Why
then
do I make
the
it so hard to understand? Because. But it's really the same. So if you wanted to normalize it, you would just multiply that by 100, and then you'd get scores between 0 and 100.
oh no, that's totally fine. As long as
Yeah.
I know that 1, if
Yeah.
you're near 1, you're at the kind
Yeah.
of top, and
Yeah,
then
the
that's
scale
fine.
is from 0 to 1.0.
Okay, and the Z5 then, the way to read that, if it's less than 0, it's very, very quiet,
It's quiet, and it's like this.
little tiny
So
bars.
the Z-score on this stem and leaf, that's 0, that's 1, that's -1, and then whatever the maximum score was, or the minimum score for that data set, you get a Z-score of the most extreme reading. Now, under normal conditions, in every other report that I do, you always see me looking at between plus or -1 is normal, and then above 1 is abnormal, and below -1 is abnormal. But it turns out that because volatility is not symmetrical, it's skewed to a fat right tail. You don't get enough. You don't get enough choices where it's less than -1. So I just had to arbitrarily. I arbitrarily just said, I'm going to put it on. I'm going to shade it red, and put it on this report if it's just less than 0. Right?
Mm-hmm.
And treat that as quiet.
Yep, okay.
Now, the reason it gets on this report for the Godzilla is because I am filtering by the 5-day volatility. So it has to be either green or red, either greater than 1 or less than 0. And then I just simply report whatever the Z1 was. So VFC is just like a normal, slightly higher than average daily range. Nothing special. If it's ever less than 0, so like double red, awesome. I call that the stealth Godzilla. Think about in your mind, we're going to go look at EA. It's in the bottom 2% of the 150-day look back, which is the weekly. The last 30 days, daily, and then the tactical, the last 10. That thing is massively oversold on all of those dimensions. And yet, in the last 5 days, it has been extraordinarily not volatile. That is a range compression on 5 days and 1 days. How could something be that murdered and yet that quiet? Could it be that this thing has got murdered and now for 5 days looks just like this? That is so abnormal that maybe it's this. That's my entire strategy. Daily box and breakout. Because either this is wrong and otherwise you're going to get some kind of grinding move, which very early is going to allow you to get paid in the first move out. It'll pay for all that risk, and then maybe there's kata twos until it gets to a 50% retracement or back to here. You figure it out. Or that thing is just going to collapse, and then this was correct, and this was just a 5-day pause, and then they discovered even more reasons to hate it. Oh, okay. That's what's happening with marijuana right now. That thing went from 40 to 8, and now it's down around 6, so the next leg down has happened. So that's what a stealthy Godzilla looks like. Here's one, and this is odd, where it's horrible, and it's, now notice that the 10-day score is up to 0.1, so it's massively oversold, but the last few days has had a little bump, but now is quiet. Oh, what's that? That means it was sold off, it got quiet, it's had 1 day or a 5-day bump, and then 1 day of quietude. Oh, what does that mean? That means it's in a critical state right here. It hasn't decided if more buyers are going to come in like a kata 2 and take it higher, or if it's just going to come back to the previous, and then if that fails a second leg, now it's a collapsing dragon. So this, it's already had 1 micro leg up. That's why the 5-day is large. Check or hold. So now I come back to this conceptual table. 5-day volatile, 1-day volatile, fully in play. 5-day volatile, 1-day quiet. It was raging, now in a pause, and now what's up? That's this one. 5-day quiet, 1-day volatile. That thing was horrible. Had 4 days of quietude in 1 big day. That's the beginning of the move, or it was a breakdown. 5-day quiet, 1-day quiet, my favorite. It's quiet. Yeah, it's too quiet. That's Electronic Arts. Check. So here's Electronic Arts. There's your 150-day look back. So this pink box or the purple box is 150 days. This is 30 days. This is 10 days. This is 5 days. And then the yellow box is 1 day. So this thing was horrible. Gap. Sold off a second leg, and now it's had 5 days. This is actually still a large 5-day range, but the 1-day range was quiet. And it's had 3 days when if it was going to fail further, surely by now it should have fallen. Why hasn't it fallen? This is the dog that didn't bark. I bet you I can go in and put a 1-day box on that. All other things being equal, find the movers. If it breaks out of that little range, out of this yellow zone, I just found a mover. Where's it going to go if it breaks out? What's the first? Well, it'll go to here, or to here, or to here, or to here, and I'll just draw that one for completeness. So you got 1, 2, 3, 4, 5, etc. The retracement's easy. And now, do you really have to have precision on how far it could drop if it failed through here? Look how this thing fails when it fails. If this breaches that 111.80, done. How long am I going to leave that contingency sell order in? For the next 6 months? Leave it in with 10 shares on and then reinforce it with 50 the day it fires. So that's what the Godzilla with 5-day quiet. Look how quiet that 5-day blue box is. The large blank blue box is the 10-day high and the 10-day low. So that's the 10-day range. Whatever percentage that is, this 5-day range, which has a 5-day high and a 5-day low, that is why it's so quiet. This is why it was a 3.2 sigma Z, I don't know, whatever it was, Z5 or some shit. Or no, even Z5 was large. Anyway, that's how you read that. Now the other one, LUMN, is one where it had a 1-day big score. I think it was, or was that the quiet one?
Yeah,
Oh,
that's the quiet
Lumen,
one.
I'm sorry.
Lumen was
LUMN was
3.
extremely small. Large 5-day, small 1-day.
Yeah.
Right, that's why. So that one, I don't mind that one at all. Look how tiny that little. Holy smoke! I mean, how many times are you going to see that? Extraordinary sell-off, and then, so here's my trading plan for that. Get short at that one. Add a second position if it drops below 375. I don't like that one so much because it's such a small price, but it's an S&P 500. What if there were 10? What if they did a 10-to-1 reverse split? Now it was 37. You'd trade it. So I don't worry about the price on that one. And if it breaks above 425, I should put that in green. If it breaks above here, do you think? Here's the next resistance. So just put a Fibonacci retracement and say, yeah, of course I would put a second one here. I'll put one here as it leaves the station, adds a second one when it becomes a cross country. It gets to here and starts to stall, cash. Oh no, it keeps going, add a third one there. Gets up into here, now I'm ready to just get out. But if it fails, that's easy. But it's had 5 days to fail and it hasn't. Low risk. That's the Godzilla. Look how far the thing has fallen in 150 days. From 11 to 3. That was like the final disrespect. Right in here, this final little gap was just to screw with everybody. Look, there have been guys that have been trying to buy this, and they just got smashed. So who's left? The owners and everybody that's vested and can't sell their shit. I don't know. You can make up whatever story you want to explain that. I just like finding that kind of extreme price behavior. So Once a thing is on the extreme, it's on the report for Godzilla. That's because the 5-day was either very volatile or very quiet. And now I can use the 1-day and come up with 6 different categories of stories. Right? 5-day volatile, 1-day quiet. That thing was enraged and then ended in a little doji. Maybe that was the turning point and the reversal, or the pause that refreshes, then the second wave comes in. I don't know. The simple fact that it was enraged and then ended in a doji is enough for me, particularly when it had the previous power of the Godzilla oversold conditions to make it extreme. So anyway, that's what I wanted to say about that little report. The main idea on all of this, in terms of volatility, was under normal conditions, when you see me describing statistics, I find the average, and between plus and minus 1, I treat as normal. It's just there were so few that were getting into this category, and a lot of the Godzillas would only get between 0 and minus 1, that in many cases that was triggering a Godzilla response. I think that was quiet enough to get it on the chart. But in terms of so normally I would think of the extremes outside of the window as being the abnormal, and that's also true for the locations. So on the locations, again, the look back period is between 1.0 and 0, and so I take the bottom 10%, the top 10%, but also the middle 10%. And the reason is, if it's purely in the middle and it was quiet, I end up getting a small risk box in there. And then it's not even a breakout in terms of the look back period, but there's 1, 2, 3, or 4 in both directions. And if it just moves to the extreme of the look back period, I'm getting a favorable reward to risk. So this is sort of the I think of that one as the fence sitter. When a fence sitter plus quiet, that's another one I love. That's the thing that nobody sees. It's in the middle of all its look back periods, and there's absolutely no volatility. It can't get any duller than that. I love that one. You could buy really cheap options on that one. How long can it stay abnormally quiet? That's the one where I would love to see the volatilities even less than minus 1. That would be a reason to love it. But it'll get reported, it'll get on that report if it's less than 0. So anyway, so I just wanted to share with you those ideas about emerging insights from the world of the sniper. The sniper simply says, we got a little sniper box. There's 3 or 4 or 5 patterns, like the Godzilla and the fence sitter and the whatever, that make these things prone to large moves when they come out of the box running. It's like you put a little Tasmanian devil in there. When you open the gate, shoom, out he comes running. And then we just use our Z3P, SSC, Kata 2, Collapsing Dragon set to decide which pattern are we using on the thing that's moving. Wait till you see the pattern you like. And that's why you should specialize in one or more of those. The reason I like the SSC is because that is the core move that when it works, you get Kata 2s. When it fails, you get Collapsing Dragons. And you don't even get the SSC unless from the open it had a harsh winter, which meant that there was a tradable move. So if you can learn to play that opening, You might actually get the harsh winter, which then sets up the SSC, which sets up the rest of that chain. So understanding the SSC and the requirement to have a harsh winter is the centerpiece of understanding those 4 patterns. Understanding the sniper target selection helps you understand why did we put that one in the trick box? Why is that one ready to go? And you might decide to specialize in just the, you could even specialize in just, not just the Godzilla, but the double stealthy Godzilla. I don't know how often, may have to look at 1,000 symbols, but when you find 1 or 2 that are like that, holy smokes. If you looked at our daily trades of the day, from about July onward, we had a ton of Godzillas that participated all the way up. And then, but now there's been enough of a rebound that there's not that many Godzillas, but starting to see fence sitters. Like ExxonMobil is a fireworks. That thing's in the top 1% of every look back period, all-time high, and broke up on Friday and closed at its all-time high. I mean, dude. So you get to decide where you want to specialize. And that's why what Dan's doing with the research project, and I want to conclude by saying, how powerful is it when a member of your trading tribe comes in and has one idea ready to go? And if you guys in the advanced group just had talk among yourselves, pick a day each week or each month for your next detailed deep dive or whatever, and just sort that out. And that's how this thing really starts getting synergy. Before we saw that the true stories and the emotional content that we got was the unexpected return on investment from the creativity lessons. And now when you start adding technical pieces to it, built on a foundation of trust, what Dan did would qualify as the annual research weekend presentations. Only now we don't have to wait for once a year. So there we are. Anyway, that's everything I want to. Let's do a quick one-word checkout, and want to respect your time. We went over it a little longer, but it was probably worth it.
Yeah.
All right, so I'll hit the tones. We'll start with Chunlong. Chunlong.
I will use the Japanese word kintsugi.
Yeah.
I hope it's pronounced right.
Kintsugi.
Yeah.
Dan.
Patience.
Kyun.
Map.
And Ernie.
Amazed.
Mine was normal. Hey, you guys take good care. Let's get ready for the Super Bowl. The
Yep.
5-hour or 6-hour
Marathon.
pregame has started, so that'll be a marathon. Holy smokes! There's just
Thanks, Ken.
not
That's
much
great.
to say.
Great lesson.
All right.
Yeah. Take care.
Have a great
Bye-bye.
day. Bye-bye.
Bye.